Greetings, friends! Have you ever wondered what it would be like to buy Bitcoin back in 2012? Before it was talked about on every news channel, before Wall Street funds jumped in, and long before it cost tens of thousands of dollars. Let's be honest, most of us missed out on that initial opportunity. But market history loves to repeat itself. Only this time, in the spring of 2026, it comes to us not as another digital currency, but in the form of decentralized artificial intelligence. Today, we are going to talk about a project that is breaking all the rules and algorithms of the crypto market right before our eyes. A project that top analysts are calling the Bitcoin of the neural network world. This is Bittensor, ticker TAO. If you've been keeping even a close eye on the charts, you've already seen the madness. The historic breakout of the rock-solid $250 level has happened. The coin is literally flying into space, leaving short sellers in tears, along with everyone who sat on the sidelines waiting for it to dip just a little bit lower. But you know what the biggest catch is? This phenomenal growth isn't just the result of fleeting ChatGPT hype or flashy earnings reports from NVIDIA. Under the hood of TAO right now, a fundamental, relentless mathematical process is unfolding what macroeconomists call a supply shock. We are currently in the exact phase where the consequences of the first-ever Bittensor Halving have hit the market with full force. Emission has been cut. Mining coins has become twice as hard. And real demand from institutional funds and developers has skyrocketed into the stratosphere. Make yourself comfortable. Pour your favorite coffee or tea. Today, with no fluff, no clickbait, and no rose-tinted glasses, we will break down why breaking $250 is just the beginning of a massive rally. We will look under the hood of the smart contracts to understand how the halving is actively draining liquidity from the exchanges right now, and why TAO is the ultimate, most asymmetric bet of this decade at the intersection of crypto and artificial intelligence. As always, hit that like button in advance to support the channel. It really helps the algorithms, and I'll give you the pure, unadulterated alpha. Let's go. First, let's clear all the garbage off the chessboard. Open any cryptocurrency aggregator today, like CoinMarketCap. Go to the artificial intelligence section, and you'll see hundreds of coins with names like AI Doge, Neuro Inu, GPT Moon, or tokens that just slapped a trendy buzzword onto their ticker. Let's face the truth. 99% of them are absolute empty shells. These are tokens that have nothing but a pretty website generated by Midjourney and bought Twitter posts from influencers. Bittensor is in a completely different league. This is top-tier technology. To understand its real potential, you need to realize one global problem humanity is facing right now. Today, artificial intelligence is monopolized. ChatGPT belongs to OpenAI, which has received billions from Microsoft. Claude belongs to Anthropic, backed by Amazon and Google. Gemini is entirely Google's domain. Literally, 3 or 4 tech giants in Silicon Valley control the most important, most powerful resource of the 21st century. What does this mean for us? They decide what AI can say and what it cannot. They censor responses, block access to entire countries, analyze your personal data, and set outrageous, monopolistic prices for businesses to use their APIs. Now, imagine an alternative. What if we created a global, absolutely decentralized collective mind? A network that any talented developer from anywhere in the world, from Tokyo to Buenos Aires, can connect to and provide their own machine learning model. And these models would compete with each other, share knowledge, learn on the fly, and get smarter together, without a single central point of control. That is exactly what Bittensor does. It is not just some smart contract running on Ethereum or Solana. It is its own independent Layer 1 blockchain, built specifically and exclusively for machine learning. TAO's architecture is brilliant in its brutality and fairness. It has miners. These are individuals or massive server companies providing their neural networks and computational power. And it has validators. They evaluate the miner's work. If a miner's model provides accurate, fast, and highly useful answers to queries, the validator gives it a high score. For this, the miner is rewarded in freshly minted TAO tokens. If the model is weak, slow, or spits out nonsense, the miner gets nothing. They are simply washed out of the system. This is pure digital Darwinism. Only the best AI survives, evolves, and profits. And this entire incredibly complex ecosystem runs on tokenomics that painfully, down to every line of code, resemble the hardest currency in the world. Which one? Bitcoin, of course. And here we come to the most delicious part, to what is happening right now on the charts. Let's look at the chart, because breaking the $250 level for the TAO coin isn't just a nice round number for joyful posts in Telegram channels. It is a macro signal of massive strength that all major institutional traders have been waiting for. Remember the coin's history. After the insane initial surge in hype, when every second crypto blogger was talking about it, TAO, like the rest of the fundamental altcoin market, went into a deep, prolonged, and very painful consolidation. The bearish phase drained people's souls. The price fell, volumes dropped, and the sideways chop felt endless. Weak hands, the so-called paper hands, capitulated. Retail investors who bought at the top hoping for quick weekly multipliers got disappointed and sold their bags at a loss. They screamed in the comments that the AI bubble popped and the coin was heading to zero. The $250 level became a sort of Berlin Wall for TAO. It was a massive macro resistance zone. Every time the price tried to approach this mark, sellers activated, algorithms triggered, and the chart rolled back down. But in this zone just under $250, a brutal, quiet accumulation was taking place. Do you know who was buying while the retail crowd was panic selling their assets? Smart money, whales, hedge funds, the exact guys who don't trade with 100x leverage, but build positions for years to come. And we will talk about their role a bit later. And then bam, a massive impulse, giant spot market trading volumes, and a daily candle pierces $250, confidently holding above it. From a technical market perspective, this is called a paradigm shift, or a complete break of the bearish macro structure. Breaking this historic level means one simple thing. The reactive accumulation phase is over. There are physically no more sellers left who are willing to dump such a valuable asset on the cheap. The sell-side order book is completely empty. Psychologically, $250 is an incredible trigger. As soon as the wall fell, algorithmic trading bots, trend followers, and new institutional players instantly joined the game players whose mandates dictate they only buy an asset when it confirms its strength and exits an accumulation zone. Short sellers were liquidated for millions of dollars, and these forced buybacks only added rocket fuel to the fire. But why did this breakout happen exactly now? Technical analysis is great, of course, but it always goes hand in hand with fundamentals. And the main fundamental reason for this flight to space lies in a 7-letter word: halving. If you want to make serious money in Kryptonaut by accidentally guessing a coin, but consciously you must understand tokenomics. It is an unbreakable law. The creators of Bittensor didn't try to reinvent the wheel with square tires. They took the most perfect, time-tested economic model the deflationary Bitcoin modelland, applied it to artificial intelligence. The maximum supply of TAO is strictly and permanently capped. Exactly 21 million coins will be mined, not a single coin more. No money printing on the CEO's whim. No sudden token unlocks out of thin air for the team. No hidden inflationary mechanisms. Everything is fully transparent and hard-coded into the blockchain's map. Every 12 seconds, one new block is created on the Bittensor network. And until recently, for every mined block, the network paid a reward of 1 TAO. This meant that every single day, exactly 200 new tokens entered the market. These coins were distributed among thousands of miners and validators. And then, the blockchain crossed that historic milestone block number 10.5 million. The first halving in the network's history. What happened at that exact second? The block reward was algorithmically cut exactly in half. It went from 1 TAO to 0.5 TAO. Daily emission of new coins dropped from 7, 200 to 3, 600 coins a day. You might ask, so it dropped. Why is it causing a price surge exactly now after some time has passed? Imagine a factory that has been producing 200 gold bars every day for years. Jewelers, banks, and investors are used to buying this volume. The market was in balance. Suddenly, one day, the factory director comes out and says, "Gentlemen, starting today, we are mining half as much gold, and our underground reserves are finite." On the first day, the difference is barely noticeable. But weeks and months pass. The deficit snowballs. Hundreds of thousands of bars that the market expected simply don't exist. Meanwhile, the number of buyers wanting this gold hasn't decreased. It's multiplied by 10 because of the AI boom. What happens to the price? It inevitably, like the laws of physics, goes up. This is the fundamental law of supply and demand. In Bitcoin, the halving has always been the primary catalyst for a bull market. After the halvings of 2012, 2016, 2020, and 2024, BTC flew into the stratosphere, not on the exact day of the halving, but 4 to 8 months later when the market physically began to feel the shortage of new coins. The flow that miners could sell on exchanges simply dried up. Right now, the exact same thing is happening with TAO, but with one colossal, absolutely giant difference that makes the Bittensor situation even more explosive. Pay attention. Here is the exact alpha that 90% of crypto bros staring only at charts are missing. Watch closely. When a Bitcoin miner mines BTC, what do they do with it? They need to pay for electricity, rent massive warehouse spaces, and buy new, incredibly expensive ASIC devices. Therefore, Bitcoin miners regularly and in large volumes sell their coins on exchanges, constantly putting downward pressure on the price. Now let's look under the hood of the Bittensor network. It operates on the concept of subnets. Each subnet solves its own highly specialized task. One subnet generates GPT-4 level texts. Another writes programming code. A third acts as a quant fund trading on exchanges. A fourth generates video and audio. And a fifth analyzes medical data. The number of subnets in the ecosystem is strictly limited. It's an absolute bloodbath of minds and capital to win the right to launch a subnet and stay in the system. And to become a validator in this network to carry real weight, manage processes, and earn new coins, you must stake your TAO, meaning lock them up in the system's smart contract. Wrap your head around this number. Today, more than 80% of all TAO coins currently in circulation are deadlocked in staking and delegation. 80%! Let's do the math one more time. Daily emission after the halving dropped to 600 coins. Miners and validators do not want to sell these pitiful crumbs. They want to reinvest them right back into staking to increase their weight and earn even more profit in the future, because the competition for a spot in the subnets grows every single day. As a result, the so-called float, the number of free liquid coins actually trading in the order books on exchanges like Binance, KuCoin, Kraken, or Mexis, microscopically small. Liquidity on the exchanges has been literally sucked dry. And right at this moment of perfect mathematical deficit, when the supply of coins is compressed like a tight spring after the halving, a new, unbelievable demand enters the stage. And this demand isn't coming from the retail guy down the street deciding to buy $100 of crypto from his paycheck. This demand is coming from the main financial streets of the world. Why do you think financial behemoths like Grayscale, a company that manages the world's largest cryptocurrency funds and ETFs, paid such close attention to TAO? Grayscale officially launched the Grayscale Bittensor Trust. This isn't just a headline for the sake of news. This means that conservative institutional investors, billionaire family offices, and U.S. pension funds can now absolutely legally, through a regulated broker, invest in TAO by purchasing shares of the fund. Institutions are not stupid. By 2026, They completely understand that over the next 5 to 10 years, artificial intelligence will flip the global economy in ways the internet could only dream of. And they also perfectly see the risks of total centralization. They do not want all the power over AI and global data to sit solely in the hands of Sam Altman from OpenAI or Sundar Pichai from Google. They need a reliable, decentralized counterweight. They need a hedge. And Bittensor is virtually the only project in the entire crypto market that has a real, scalable, and working product of this caliber. Every time a fund like Grayscale buys TAO to back its clients' shares, it moves those coins off the exchanges and sends them into cold storage. Forever. They are buying up the tiny supply left over on the market after the halving and validator staking. Add to this the developers and the B2B sector. To launch a killer project on Bittensor, teams need liquidity. They have to buy TAO from the open market to pay for neural network queries within the subnets. The network is growing exponentially. New AI-based decentralized trading apps, next-gen content generators, and decentralized search engines are launching. And to use any of these products, a TAO token is burned or transferred under the hood. This creates the perfect mathematical storm. Number 1. The supply of new coins from the network is permanently slashed in half. Number 2. Over 80% of the circulating supply is locked inside the ecosystem to keep the network running. Number 3. Massive funds are buying up the leftovers for Wall Street institutions. Number 4. Real developers and businesses are buying the token for pure utility. This is exactly why the breakout of $250 happened so aggressively and without a pullback. The sell-side order book was empty. There were no sellers. The moment the price broke historic resistance, it flew up because there was no one left to stop it with massive sell walls. This is a supply shock in its purest textbook form. Alright, $250 has been breached and left behind. The chart on the higher time frames looks as bullish as it gets. The logical and most important question arises, what's next? Where are the growth limits for this asset in the current cycle? Many crypto enthusiasts are currently shouting on every corner about TAO hitting $2, $0, or $5, $0 and beyond. I suggest we put emotions aside, turn off the greed, and look at the dry market capitalization numbers. Let's compare. The current valuation of OpenAI, the creators of ChatGPT, comfortably exceeds $80, and in some funding rounds, $100 billion. And that is a completely closed, centralized company subject to immense regulatory pressure. What is the market cap of TAO, even at a price of $250 to $300? Just a couple of $1 billion. For a project that is right now claiming the title of the base infrastructure layer of decentralized AI for all of humanity, a $3 billion market cap is a joke. In the last bull market, mediocre meme coins with dog pictures on the Solana blockchain were worth twice as much. If the AI plus crypto narrative continues to develop, and it will, because the synergy of blockchain and neural networks is the primary tech trend of the decade, Bittensor has every fundamental chance to enter the top 10 or even top 5 global cryptocurrency rankings. Mathematically, a target of $0 per coin is just a matter of time, liquidity, and the continuation of the broader bull market phase. $0 is only a 4x from current levels. And if we factor in the galloping supply shock effect, which usually fully unfolds about 6 to 12 months after having long-term targets in the 500 to 2, $0 range no longer seem like the wet dreams of degenerate gamblers. That is a perfectly reasonable valuation for a monopoly in the Web3 AI sector. But, friends, let's skip the euphoria. This is not a call to immediately mortgage your house, take out loans, and market buy the coin with your entire net worth on 100x leverage. The crypto market is cruel and unforgiving, and even the most fundamentally strong projects can be subjected to brutal manipulation and shakeouts. Are painful retests of the $250 level or even lower possible? Yes, of course. Any healthy organic growth requires corrections to shake out the weak hands. Are dumps possible amidst global stock market crashes or Federal Reserve news? Absolutely. But if you are an investor with a horizon of at least a couple of years, if you understand the DCA strategy dollar cost averaging, and know how to hold a fundamental asset without panicking at every red tick on the 15-minute chart, TAO looks like one of the most brilliant and asymmetric bets of our era. The risk is clear and always present, but the potential reward is life-changing. Friends, we are living in an incredibly interesting, unique time. Right before our eyes, the historic merger of the two most important technologies of the 21st century is happening: blockchain and artificial intelligence. Blockchain gives us decentralization, security, and honest money, while AI gives us unprecedented computational and cognitive power to solve incredibly complex problems. And right at the tip of this high-tech spear is the Bittensor ecosystem. The breakout of the crucial $250 level and the aftermath of the first historic halving aren't just loud news headlines meant to grab attention. This is mathematical confirmation that the mechanism is working exactly as Lehman Baird and the project's creators intended. The supply shock is fully activated. Liquidity on exchanges is melting day by day, and the decentralized algorithmic future is just beginning to be built. Thank you so much for taking the time to watch this deep dive to the very end. I am incredibly curious to hear your thoughts. Do you really believe TAO is the Bitcoin of the AI world? Or is this project overvalued by the crowd? Are you expecting $0 per coin in this bull cycle? Be sure to drop your price target and your thoughts in the comments below the video. I read everything and gladly replied to the most interesting and well-argued opinions. If this episode helped you understand the project's complex tokenomics, if you finally grasp how subnets work, and you got truly valuable info without the fluff, please support this video with a like, subscribe to the channel, and make sure to hit that notification bell. By doing this, you're not only helping my channel grow in the algorithm, but you're also letting YouTube know you want smart, analytical, high-quality crypto content rather than just ads for the next scam token. And remember the most important rule of crypto: I am not your personal financial advisor. Everything you heard in this video is my personal analysis, thoughts, and deep market research. Only invest money you are mentally prepared to lose, always stick to strict risk management, and make decisions with your own head. This was Anna. Protect your deposits, trade with a cool head, study the tech of the future, and I will see you very soon in the next video. Bye!